Hi everyone. So the topic that we're going to be discussing with these gentlemen is how to include crypto in your portfolio. To start that off, I would like each of you to give a short introduction, including how, when, and why you got into this field. Starting with you, Valentin.
Oh, it sounds like a start of the book, autobiography. So, how? I was in a restaurant and owner of restaurant, he told me that he bought some tokens on ICO. It was 2017, and as a former hedge fund manager, I started to ask him, what does it mean? Is it some kind of equity or debt? What is token? And I figured out that startups started to print new money. And this is like a new metal, which is very like gold. However, it's not yet recognized by the users. But it's more easy to use as money than gold or store of value. And they start to build their communities to agree that this is the real gold, right? And then it became real gold because the technology solved the property rights problem. You don't need army, political system, police, courts, banks, central banks to manage who owns what. It's done effectively by their consensus algorithm. And I started to think, wow, there should be thousands of currencies and millions of assets because the humankind, modern humankind, is built on markets where there are investors, they buy stocks on the market. This increase price of stock options of stocks. Then it increase salaries of developers, like in 2000 bubble. Then if price of developers increase, the dating value also increase it on the dating market. So people start to fall in love differently. Thus Harry Potter defeated Conan Warwar because 20 years ago investors bought equity of internet companies. They predicted that now, this year, these companies will conquer the future. And that's how signal from the future is sent to population today and manage their feelings and actions to maximize the future value of the economy, of NASDAQ index, right? And crypto can play a great role here because it makes markets way more efficient somewhere where we don't have markets, monetary markets, where we still have social currency, which is barter with unclear kind of exchange prices and other things. That's how I decide, wow, I should go to crypto. This is the future. In 20 years, the way planet is managed will change.
Matt?
Yeah, thank you. Hi, I'm Matt Dixon from Evai.io. I'm the CEO. My journey started in the mid-1980s. I started off trading some privatization issues, and I've traded through various market crashes. So we had the 1987 crash. We had the dot-com bust, basically, in the early 2000s, and we had the 2008 crash. So I actually made a lot of money before the 1987 crash, and I lost a lot more money during the crash. I did a little bit better in the dot-com, and then 2008 came, and I was ready for 2008 because I understood the markets much better, understood the opportunity. And one of the big opportunities and risks was the failure of the ratings agencies at the time. So we have now moved on. This was really the birth of Bitcoin. This is why Bitcoin was birthed in 2008, and move away from centralization and now the opportunity that decentralization offers. So late in life, I did a master's degree at university in the UK, and we studied all the reasons for the crash in 2008 and what needed to be done. And this really got me interested in the opportunity that cryptocurrency offered as a new and emerging but alternative asset class with amazing opportunity. And if you understand it properly and understand the drivers behind it, there's opportunity to make money. So this is what drives me, and this is why I'm really interested in the subject today.
Thank you. Dirk?
Yeah, hey everybody out there. So my name is Dirk Hartig from Prime XBT, and I've been a trader for 25 years already. Many of those years as a stock trader. So this is how I started out, working for hedge funds, for family offices, specializing in Forex options. And It was during my time when I was working actually for a family office in Singapore that on my way to work, I came by a Bitcoin ATM. And every day, so I had a very classical banking mindset back then still, and every day I would think, who buys this? You know, what is this? This is a scam, this is a Ponzi scheme, this is worthless. Until it took another 2 years for me to really fall down the rabbit hole. And you know what they say, once you fall down the rabbit hole when it comes to cryptocurrencies and especially Bitcoins, you never can come out again. So in 2019, I decided to become an independent trader, to only concentrate on trading my own money. Mainly still in Forex options, obviously. Plus, I started out with my first investments in cryptocurrencies as a trader. I've been for a longer time already invested in Bitcoin. And I did so with Prime XBT. And eventually they approached me and told me, well, Dick, you are quite successful on our platform. Do you want to share your education, your background, your knowledge, maybe with our traders as well? So in the past year, I've been busy building up education department for Prime XBT to kind of help new traders in this business to avoid all those traps and tripwires out there that lie on the path of becoming a successful trader.
So that leads me to the first question on the topic. Valentin, starting with you. Based on your experiences, how should people approach crypto investments? Like, you know, not walking by an ATM. Like nowadays, it's much more diverse.
Oh yes, crypto is super volatile, and there are cycles. As I think most of you know, there's a great report of Anderson Horowitz. They showed how the cycles works, right? So the previous wave is about getting $20–40 billion investments into startups. Then there is a crypto winter when the startups are building their products. Then their products start to get some traction, attract attention. As people start to use it, come in and buy crypto, it starts to grow. And then there are another 200 million people join crypto just because it is growing. They want to buy a Lamborghini after the other guys, and this results in another bubble which will crash. But there are new 200 million people in the market, and there are 5 billion people will join this within a decade or so. So think about these bubbles, like crypto adoption cycles. Don't get burst on it, right? And think, where is the traction? Which tokens will grow? I think this is about multi-chain. I think there will be thousands of chains. And you need a tool to trade between these chains on DeFi. That's I would talk later about.
Matt? So how should people approach crypto investments? And you know, like I'm talking about people that are just starting out, that have just walked into this space.
Yeah, it's important to understand that crypto is not some magical investment instrument. People used to think that you invest in crypto, and people in the early days, back in 2000, you know, after Bitcoin was launched in 2008, and shortly after that, people just bought and made an awful lot of money out of cryptocurrency. But it's actually just the same as any other liquid asset class, but it's an emerging asset class, so we need to understand that it's more volatile. But it is just another asset class, and it has the same drivers. So rather than being this magical investment instrument, we need to look at what's behind it and what drives it, and it's actually the usual things. The strength of the US dollar, the level of interest rates, the allocation of capital towards risk assets, and this is what people really need to understand. It is an emerging asset class, so the key thing is education. People need to understand that it is just a normal asset that's driven by these fundamental factors. And so we've seen what's going on in the world at the moment. We've seen interest rates rising, and we've been in crypto winter for about a year now. But this doesn't mean it's all over. This is, I understand, the fourth crypto winter since 2008. So it's just a cyclical investment that people can still make money out of. Nobody knows precisely where the top and the bottom is. But because it's volatile, and because it is the future, blockchain is the future, as we heard on the earlier panel, there's so many opportunities, what with NFTs, And with blockchain, making everything life so much simpler in terms of reducing costs, increasing productivity, it is the future. So we need to be investing, but I'm sure we'll come on to it, diversification is the key, and actually understanding how these assets work and making the most out of it. So there are amazing opportunities for us.
Yeah, I think you nailed it really already. And maybe what I can add there is, from a perspective of a trader, that you have to trade any asset class and actually any trade, any investment really like a business. Treat trading like a business. So I'll give you an example. What we see very often with beginner traders is that they buy an asset, let's say for example Bitcoin or Ethereum or some other crypto, and once the position starts running against them, they top up because they want to get their initial buy price averaged down. And this, if you allow me this analogy, is a little bit like when you run a business. For example, you are selling shoes, and maybe you found this really great model of a shoe that you think your clients will love this season, and you buy a lot of that, you put it in your showroom, and sadly, nobody wants to buy it. And then suddenly you get the offer from your manufacturer to buy the same shoe for half price. Would you do that? Of course you wouldn't. Why would you do that? Because still nobody would buy it from you. And this is the same when it comes to investing, when it comes to trading. Do not throw good money after bad money. Make a business decision. Before you enter a trade, before you make an investment, no matter what the time frame is, think about where's my exit going to be? And where do I cut my losses? Like, what is my maximum threshold of pain? I think this is really, in my opinion, one of the very important lessons that I personally had to learn very painfully early on.
So one thing that we've seen is, whenever there's a hype, people start following that token, right? Or people start, just focusing on one asset class. How important is it to have a diverse portfolio in crypto?
This is startup stage. It's about spread and pray. So you invest into a lot of tokens, a lot of startups, and one of them make 100x. That's how venture industry is working, because you cannot predict much what will happen inside the team. Which of the founder will start to sell their tokens, so other will compete to sell them fast. Which of the founder will start to do his other ICO. Even if the product is good and team look good, this is very uneasy to predict. So this is about, if it's about early investments, like seed stage, then it's full like spread and pray strategy, right? If you are talking about bigger tokens, I would look into some gap. So there are some big crypto raise, then there is some gap. So altcoins raise afterwards. If you didn't jump into growth of tier 1 tokens, maybe buy tier 2 tokens. But this works when there is a big wave of money inflow. Money comes into Bitcoin, then Ethereum, and others with some gap. So you can catch this gap.
Do you agree?
Yeah, I mean, the whole of the foundation for investment is actually modern portfolio theory. And modern portfolio theory is about maximizing returns and minimizing risks. And to do that, you need to diversify. So we need to diversify across asset classes, so equities and bonds, et cetera, and we also need to diversify within asset classes. So, as I often say, when you're looking at Financial Times, you might look at the different sectors: oil and gas, retail. So retail is one of those sectors, but within retail, you've got maybe various outlets: Tesco, Sainsbury's, various supermarkets, Carrefour. You wouldn't put all your eggs in one basket. So it is about actually doing your research. And actually, when you're talking about diversification, it's no point copying your asset and doing similar assets within it. You need to have uncorrelated assets, so assets which don't move in the same way at the same time. So when one is doing well, another one might not be doing so well. But this has been proven over time to give the best returns. So within cryptocurrency, they tend to be correlated together, so they tend to I don't actually believe they follow Bitcoin. I actually believe they just all move together. So they don't. I say they all move together. In general, that's true, but there are actually ones that you can pick out. So you need to really do your research and identify those which have specific use cases, specific utility, real value. And I cannot say enough, as Dirk was saying, as a professional trader, treat it as a business. You don't just go out and buy a load of assets because they're crypto assets. You need to do your own research and identify those assets and see that they have different use cases. Don't just go for one class. So diversification, as I say, is important across all the asset classes, but within crypto as well. So you might hold 5, maybe 10% in crypto, but then within crypto itself, you might actually diversify there 10 or more assets. And as I say, diversification, education is key, and it's just the cornerstone of sensible professional investment.
Yeah, I absolutely agree. I think when it comes to risk management in cryptocurrencies, correlation is really the key. The problem with crypto as an asset class, in my opinion, is that you either have a Bitcoin season where Bitcoin outperforms the top 50 altcoins, or you have an altcoin season where the 50 or 49 altcoins, top 49 altcoins outperform Bitcoin. So you always switching between Bitcoin season and altcoin season. And this is not only extremely difficult to time, in my opinion, but it puts you very much at risk. So if you need to find other asset classes that are maybe not correlating with Bitcoin. And this is, by the way, not the stock market. In the bear market now, if you look at the chart of the S&P 500 or the Nasdaq and compare it to a Bitcoin chart, you see a very high correlation. It's like they are copying each other. And so the thing that works, in my opinion, at the moment, if you really are looking for something to kind of hedge your crypto risk, is having US dollar cash or US dollar Tether or US dollar coin or whatever your preferred method there is. This is really the only thing I see as a true hedge at the moment when it comes to stabilizing a cryptocurrency, altcoin, Bitcoin portfolio.
Yeah, I mean, it's quite interesting when you look at, we talked a bit about correlations there, so I just looked at some charts recently, and you can look at cryptocurrency or Bitcoin against the US dollar, and you'll see they're completely inversely correlated. So as the US dollar has been strengthening, cryptocurrency and Bitcoin has been weakening. So the reason this helps us is Bitcoin and crypto haven't been around that long, so it's very difficult for us to understand the actual drivers behind, the price drivers behind these assets. But we can look at the US dollar, and we've got a much longer history. I mean, the US dollar's been free floating since the early 70s. So we can actually see very clearly the correlations between interest rates, between economic growth, between unemployment rate, these things that drive the US dollar effectively. So we can look at the US, which when they say if the US sneezes, the world catches a cold. So we can look at the US economy, and we can look at the drivers behind the US economy that affect the US dollar. And because there's this really direct inverse correlation, whether that's the right thing to say, direct inverse, but there's this inverse correlation between cryptocurrency and the US dollar. So we just look at what's driving the US dollar. So this is what's informing my trading at the moment. For the big picture, for the long term, we can look at the drivers for US dollar. Short term, it's all about research and identifying those assets that are going to move short term.
All of you have alluded to the fact of, do your own research. That's a common phrase that's used for investing in this space. What do you mean by do your own research? You guys have years of experience where you know what you're looking at. But for someone coming in, what do you mean by do your own research? What should people be looking at?
So, I think for newcomers is the best start is kind of buying some big coins which are already known. But if you want and bet on the cycles, bet that the Federal Reserve rate will stop growing, then money come in and everything will grow. For more sophisticated bets, it's good to understand what kind of products can grow for the next season. So last season was about DeFi, it's yield farming tokens, new chains as always, like which support DeFi. Then it's games, NFTs. It's good if you have expertise in one of these areas. So then you can look into teams and think, hey, this team really can build a great game and a token used in this game. Right? Then you can have advantage over those who just make more blind bets. So again, number one is your bet on the federal rate and the next crypto cycle. And second, it's about your professional expertise. Try to find the niche where you can be better investors than others by understanding the underlying project.
Yeah, as I've said, it just depends whether you're looking long-term or short-term. So if you're looking long-term, as I just said, for me, you look at the US dollar. What's driving the US dollar? So what drives the prices of assets, both short-term and long-term, is obviously supply and demand. And what determines supply and demand? At the moment, we're seeing the US dollar rising, so money is coming out of risk assets and it's moving into the US dollar, which is why we're seeing this crypto winter with, it's been going on for the past year, because the US dollar has been rising. And it's been driven by rising inflation. Treasury bonds are basically people have been putting money into treasury bonds which are safe and secure, away from risk assets. And this has been driving the US dollar higher. So we need to look at the US dollar. That is what's creating the supply-demand balance there for long term. But shorter term, we can look at the drivers are really the fundamental and the technical indicators on cryptocurrencies, if we're looking at crypto specifically. So we can look at things like sentiment, and we can look at fundamentals that are happening in the world, fundamentals that are specifically happening to cryptocurrencies, so that's where your research comes in for individual cryptos. But technical analysis also has its part to play. Now individually, it's been proven that individual technical indicators have no predictive capacity. But when you use the latest technology, artificial intelligence and machine learning, and combine all of these indicators, and this is beyond what the human mind can do really, because there's so much data available these days, you can collect data from all the fundamental sources and the technical sources, you can combine it together, and unlike in the past where you had a fixed system, when the market changes, the system no longer works. It might work when you first invent it, but then the market changes. So with AI, the advent of AI and the increase in computing power, we can now use this technology to be adaptive, to move with the markets. So this is what people need to be thinking about. And I think the days of the individual sort of day traders is pretty much over. And we need to get away from people just investing in crypto and it going up. By doing your research, we need to do research into what really works. And as I say, for me, it's actually the future is artificial intelligence, it's machine learning, and this is what will help us to identify the best investments moving forward.
Yeah, I think do your own research. It also ties into risk management, and we are all different as traders and investors. So you might have a risk profile where you think, well, if something goes down by 5%, I'm already going to have sleepless nights and it's going to give me headaches, whereas other people out there, don't sweat anything if their portfolio goes down by 50%. This is what you need to take into calculation. This is also what I meant, by the way, in the beginning when I said treat investing like a business. But it goes deeper like this. If I look on social media, especially on Twitter, on YouTube also, there's of course a lot of biased information out there where people are motivated to invest in altcoins because, I don't know, Doge could go to $1 or whatever. And it's of course very, very difficult to resist that because there are preformed opinions out there and it's easy to follow those opinions. But I can only encourage you, take your time, and this is especially important when it comes to investing, for example, in a new altcoin. And let's be honest, everybody that is in crypto, including myself, we are always looking for the next Bitcoin, right? For the next coin that can go up by 100,000%. So it's important to read the white paper. It's important to ask yourself, is this project really doing something useful? Or is this just maybe somebody, you know, who wants to ride the wave of a bull market and grab some fast cash and then it's going to disappear? We had more than enough examples, especially this year of that, sadly. So spend some time, spend more time on doing your research than you might spend on choosing your outfit for the day, maybe.
I kind of agree and disagree with some things that you've just said, or things you said in your previous. You said about people just buying assets when they fall in price just to buy more of that asset to average their price. I am a great believer in dollar cost averaging or pound cost averaging, so averaging your buy price, because we don't know where the top or the bottom of the market is. So I do agree, but I also agree with what you said about obviously doing your research and identifying the best assets, what those assets do, is there a real use case, is there a real utility, etc. So I'm just kind of saying that if you've identified an asset that you really believe in and you've done your research properly, then there's nothing wrong with buying more of that asset if the price falls. And I know for a fact that you're buying more Bitcoin as the price depreciates, yeah?
Absolutely, absolutely. Thanks for pointing that out. You're absolutely right. It's part of an investment and of a trading process also. So what I personally do, and we just had this example when we were talking outside about the US dollar, if I see a trade, investment, I'm not putting all of my money in at one time. I used to scale in, because that ties into what you said earlier. We're not able to identify like on point where bottoms and tops of markets are. If you are able to catch like 50, 60 or 70% of a trend, you are already in very, very good shape. However, what I meant with don't throw good money after bad money earlier is if you have invested maybe already like 30, 40 or 50% of the cash you want to do for all of your investments, maybe then you should draw a line somewhere. Do not go like 100% in something, no matter how much you believe in.
We've got 3 minutes left. Valentin, I'm going to come back to you. And for the audience, what is it that's coming? What are we looking at in the future? You'd mentioned something about multi-chain complexities.
Oh yes, that I believe the next wave is about a lot of new use cases which are called Web3 wallets. These tightly integrated dApps with the social networks, with games, with e-commerce, with their own chains, their own currencies used to share the network effects, their personal data, and other value created by users. So this is about co-ownership of the products. That's Web3 era is about co-ownership. It's about participating in also some management decisions via DAO. So thus there will be a lot of chains and a lot of dApps on it. And we will need a very simple interface to manage these dApps, these tokens across chain. That's why we built LATOKEN. LATOKEN.io already make it easy to farm across chains from a single point. You don't need to buy gas tokens for all of the chains. You don't need to open wallets in all of the chains. You just click a button to deposit into a farm which you like on any chain. This can be used for tokenized funds, for automated asset management, for buying and staking tokens on other chain. Also easy for mass adoption. No dependence on centralized exchanges. That's all DeFi.
Nice. Matt?
Yeah, there's a famous economist, his name escapes me at the moment, but he talked about something called constructive destruction or something along those lines, that basically destruction is necessary for construction to take place. So we're in this crypto winter at the moment, and I'm going to put my neck on the line and say I actually believe we're not in the depths of winter yet. We've still got somewhere lower to go in the market. But this is actually quite good, and it's a natural thing that you see some natural wastage within the ecosystem. So if you're asking where we're going, there are going to be some players that fall out of the market, some cryptos that disappear, and this is why doing your research and your due diligence is important. But this is actually creating the environment for real growth and real construction in the future. So moving out some of the, cutting out some of the dead wood, as it were, to create the right environment for growth in the future. And I think that is going to happen. And from a chart perspective, I see lower to go, but I think, sometime next year, hopefully, we're going to see some amazing, exciting opportunities for growth.
That's something to look forward to then.
I'm sorry, the question was, what does the future hold for crypto?
What's the future
Okay,
hold?
good.
Yeah.
I like, Vitaly, what you just said about usability. I think this is really a good point. You know, when I try to explain to my parents, especially to my father, who's in his mid-80s, what I'm doing, not as a trader, but the assets I'm investing in, especially crypto, especially Bitcoin, I utterly fail not only to explain it to him in a way that he understands, but I also fail in actually showing it to him why this is useful for his daily life maybe in the future. Because the UIs are just terrible. I mean, let's be honest. And in my opinion, this is especially true for DeFi. There's so many great ideas out there, but I've not yet seen really a UI that you can grasp just in a couple of minutes or seconds, like an iPhone, for example. Yeah, for me, the iPhone is the prime example of a good user interface. It's very easy and intuitive to navigate and to use. And my wish for the next years is really that we see something like this also for crypto, for use cases of crypto, so we can access an audience and a user base outside of what we are seeing right now, which are mainly younger generations, maybe with the exception of me, using really crypto. So I want to see something where my dad in his mid-80s says, hey, yeah, this is easy to use, this is cool, I want to use that in my daily life.
Thanks, Dirk. So I've asked all my questions. Does the audience have any questions for these three gentlemen? Any way of investing in crypto through ETF?
Actually, that's what we are working for, DeFi ETFs. It's not like traditional ETFs. Also on light chain, we make it possible to create a fund structure fully with a smart contract, which can be a kind of index or smart management of yield, and this token can be used as some kind of very simple way to follow the market segments and so on. I would call this like crypto ETF, DeFi ETF, but it's not about the general traditional markets. Yet this will make it easier for family offices to get into yield farming, for example. They want stable coins like USDC with 10-15% yield across chains. So there is no market risk. There is they should just buy the index and manage this in a fully decentralized way. They just need a crypto wallet to manage it. That's I think is the future of the market. There will be no need in ETF in 10 years, I think.
Well, unfortunately, we're out of time, but the gentlemen are here. You can ask them your questions later. Thank you so much for taking the time.
Thank you.
Thank you.